Hi, this is Andy Chambers. I started studying charts 30 years ago. In the 90s, before the internet really took off, I was the editor of a printed weekly futures chart book and a printed futures options book. Well, we don't see those anymore. Unfortunately, the company I worked for didn't make the turn into the internet age. I had the opportunity to join the Tradewinds team in 2001. I've been very lucky to be affiliated with Tradewinds since then. The biggest change for me is that I now focus on stocks instead of futures. However, the charting principles I use are cross-applicable across all markets and all time frames. I want to repeat that because it's very important. The charting principles and techniques I teach can be applied to any chart on any time frame. Although I've taken a break lately, I produced monthly YouTube videos for quite a while. In order to show you that the way I analyze charts works, we're going to start by reviewing the chart setups that I pointed out on the monthly video that was uploaded to YouTube on November 3rd, 2011. The YouTube videos are still out there for you to see. The monthly YouTube videos always focus on monthly charts. The videos are on the Tradewinds 1 YouTube channel. The first chart we're going to look at from the November 2011 video is a chart of the Dow. At the time I said, wow, the market's had quite a turnaround in October. It looks like a month that's destined to be a marker, one way or another. Right now, it looks like it could mark the beginning of a big, long move up. However, if the major indices break support at the October low, look out below. I went on to say, here's a monthly chart of the Dow with an enticing bullish outside bar for the month of October. The red arrow is pointing to the bullish outside bar. The low of the bar the arrow is pointing to marks key support. Key support for the Dow is 10,404. The initial upside target is 13,450. Well, that was then. This is now. The monthly bar with the low at 10,404 marks the October 11 low that we referred to on the previous chart. As you can see, the Dow blew through the initial target of 13,450. Of course, we raised the targets along the way as the market continued the very strong advance. Next, we have a monthly chart of the S&P. The S&P also posted a wide-range bullish reversal in October 11. At that time, we said the next upside target for the S&P is 148. Key support lies at the October low of 107.43. The S&P, like the Dow, went way beyond the initial target. We raised the targets each time it made a new swing low. The S&P midcap also had an enormous wide-range bullish reversal in October 11. The last time we updated the targets for the midcap was at the end of November 2012, when the midcap was just over 180. At that time, targets of 200 and 210 seemed very generous. The chart for the Russell 2000 Small Cap Index looked very bullish, just like the other indices. The IWM went through the first targets, and it's very close to the last of the three targets we noted at the end of November 2012. The QQQ was actually the first chart we reviewed on the November 2011 YouTube video. At the time I said, we're going to start by taking a look at the QQQ, or the NASDAQ 100 ETF. We're starting with the QQQ because right now it appears to be the strongest of the major indices. If the QQQ pulls back and makes a higher low bottom, we think it could really take off. As you can see, the next upside targets are 69 and 76. Well, the QQQ made a good initial push off of the October 2011 low, but it couldn't sustain the move. It didn't turn out to be the strongest index, but it has caught up very well. After we reviewed the indices on the November 2011 video, we took a look at some individual stocks. Some of the stocks, let me say, all of the indices did well. Some of the stocks turned out to be blockbusters. They did even better than the indices. Some were lackluster, and one or two were losers, unlike the indices that were all winners. As I did back then, I'm going to start off with the biggest loser. I went in alphabetical order, and the biggest loser happened to start with A. I began by saying, now we're going to look at some individual stocks that could have excellent upside potential if the overall trend is turning up. Please remember that we're looking at monthly charts. Monthly setups take time to mature. If you buy calls based on any of these charts, please buy plenty of time. And when we say please buy plenty of time, we mean buy as much time as you can. The first stock is ANF, or Abercrombie & Fitch. The next upside target for Abercrombie & Fitch is $98. Key support lies at the October low of $57.17. What a wipeout! ANF closed below our key support level the very next month. But don't worry, it gets better. That was the only stock we reviewed that didn't move up at all. Next was CMS Energy with an upside target of 31. CMS hit $29.94. It hasn't reached the target yet, but it's been in a steady rise and there are no signs of a top. The next stock was Costco with targets of 100 and 114. Costco was below 85 when we mentioned it. It hit the second target of 114 and hasn't stopped yet. The next stock was DTE. DTE was just over 52 at the time. The target was 74. Last month, DTE hit 73.32, very close to the target. Next, we have HCN with a price just below 53 and a target of 72. Well, HCN hit the target and kept going. The next stock was Heinz with a price just below 53.50 and a target of 70. After going sideways for a year, one of the good reasons we buy time, Heinz stock price was up 20% in one day on news of a buyout led by Warren Buffett. The big gap up took it from 60.48 to 72.45 in one day. Buying time paid off. Humana had a great bullish outside bar in October 11, so we had solid upside expectations for Humana, just like we did for the others. The upside targets were 92 and 103. Well, Humana rallied to 96.46 before it suffered a steep drop and posted a monthly close below key support. It did get through the initial target, but Humana was one of the poor performers. LVS was next with a target of 66. The jury is still out on LVS. It didn't post a monthly close below key support, so it still has the potential to hit the target, but it would have taken a lot of patience to hang on. By the way, the September 2012 close above the July and August highs gave us a second buy setup, so it still has the potential to hit the target. Mattel got us right back on track. Mattel closed at 28.24 on October 31st, 2011. The upside target for Mattel was 36. Well, Mattel reached 48.48, much higher than the initial target of 36. Next, we have McKesson. At that time, McKesson was trading at 81.55. We had targets of 99 and 113. McKesson hit both targets and hasn't stopped. Mo was next. Mo closed at 27.19 on October 31st, 2011. Our initial target was 36. Mo squeaked through the initial target, then it pulled back and set up a new buying opportunity with a monthly bullish reversal in November 2012. Pinnacle West was next. The price was just below 46. The target was 68. Pinnacle West wasn't a stellar performer, but it has rallied nicely and there are no signs of a top. TEG was next. The stock price was just under 53. The target was 66. TEG hasn't hit the target. It rallied, pulled back, made a higher low bottom. It could ultimately hit the target, but it's still a lackluster performer. TSO turned out to be the top performer. It was just below 26 when we posted the video. The target was 44. TSO didn't do much for a while, gave us a higher low buy setup in July 12, and it exploded after that, all the way up to 63.74 and higher. The last stock we reviewed on the November 2011 YouTube video was WYN, or Wyndham Worldwide. WYN was just below 34 at the time. The target was 52. WYN was not as good as Tesoro, but it did hit the target and it almost doubled in price. I ended the 2011 video by saying we're going to finish up the message with the message we started with. Wow, what a month we had in October. It looks like it's destined to be a marker one way or another. Right now it looks like it could mark the beginning of a big, long move up. However, if the major indices break support at the October low, look out below. We have not been bullish all the way through this big bull move. We hedged some positions in June 2012, and we exited or hedged all of our long calls before the sharp decline by late May 2013. This is what we said in the newsletter for May 26, 2013. After being patient with our long calls for months, last week we exited or adjusted almost every position we were in. Our long-term outlook is still bullish. However, the market has been very strong for 5 months. Now it seems overbought and due for a correction. Most traders have heard the saying, sell in May and walk away. Obviously, this overbought market is right in that time frame. The trigger for the exit was the big bearish reversal day last Wednesday, May 22nd. In the video, we were looking at monthly charts. However, the charting principles can be applied to any chart and any time frame. We said that earlier in the video, and we want to say it again. The charting principles we use can be used on any chart on any time frame. The black and white chart we just looked at was from the newsletter, for example, was a daily chart, not a monthly chart. If you would like to watch the video from November 2011, please go to youtube.com, search for Andy Chambers, November 2011. Thank you for your time and attention. Good luck and good trading.